let them know I'm going to scream out of here at some point.
Hey, everyone.
Or we might want to say, hey, if you're giving away any money, they might stick around.
Oh, yeah, right. I'm giving away lots of stuff. Everyone gets money. Now, how you guys doing? It's been a long day. We're finishing up the end here. We want to go through. We want to go through a lot of stuff, but I wanted to anybody have questions about what the day has transpired and want to go over a few things? I know a lot of people have to listen to us talk, and a lot of people talk all day long. Who here has a question? Sorry, I can't see. I'm like interrogating like I was getting locked up.
I know that light.
The interrogation light.
And before he starts, I do apologize. I wanted to hang out as long as possible. I'm going to be screaming out of here on a flight here at some point. So when I get off and run away, there's no fire, but I got to catch a flight.
Hello? Shoot.
Hello? Okay, so McKinley Martin here. I'm a day trader myself, and I guess this.
You got some competition?
I guess it's for you, Randall. I'm guessing in terms of, when you put your indicators on, when you have your stop losses and your take profits, do you think that putting those certain indicators as close to your support and resistance lines is important to alleviate any type of emotion that some traders might actually encounter when they are trading?
Yeah, I think it's definitely important. And I will admit I don't use stop losses much. It's just one of those things. If you've been in it more than a minute, there's just times where you've been stopped out. It moves so fast where you're like, you wake up and then all of a sudden it's gone down and gone back up and it's swung so hard. So I usually don't, because the reality is I usually don't get into a position I'm not willing to hold. So I think I said this in a previous panel. I'm willing to hold every single position I have for over a year. So if it goes down, I'm like, so what? The next month or the next time I'm making a bet or making an investment, I have liquid capital to buy that. So that's what I was mentioning before. If I'm getting in, even though it's a perfect setup and it's a bull pennant or a bull flag or something like that, and I'm like, yes, if it's overall a bear market, so if it's Q1, Q2, or Q3, almost every single year in crypto, I will only invest 50% of whatever I'm thinking I'm going to invest in that active trade. And I leave the other 50% just because it's my pessimistic view on, I assume right when I want it to be so perfect and that formation is so beautiful and the TA looks great that all of a sudden something's going to announce something about Bitcoin and it's going to just throw everything off. And so then when it drops, I just buy in more. And so each one of my positions I look at discreetly. Now my sell, I do that just to keep that discipline, and I'll usually ladder them in at some level. So I'll say above some percentage, I'll sell a little bit at 1.5x, 1.6, 1.7, 1.8, 2x or something like that, so that I kind of catch whatever that is. And then I'll sometimes put in sells for different positions for extraordinary moves, and those are totally arbitrary. I'll have, let's say I'm putting in $100 and I'm going to invest, maybe I do want to do more. I might invest 25, keep 25 for that bear market, it breaks down, and then I invest another 25 or something. And I just set a sell at 2x. If I 2x my money, I 2x my money. I'm not even going to touch it until I 2x it. I don't care when and how it happens. And so I've literally caught moves. Sometimes it's even manipulation. There was some random move where I had some stupid sell. I get silly sometimes with some of my stuff, like mana. So if you ever heard of Decentraland, just because Ready Player One, people have this fantasy. A lot of people in crypto are, let's be honest, we're kind of geeks and we like technology and we like virtual reality. And I remember Second Life back in the day, and people were selling random, virtual land for hundreds of thousands, if not millions of dollars. And so I'm like, oh, this is Second Life 2.0, and it's blockchain. I literally hashtag my comments about mana virtual shit, and people love virtual shit. And so I think I got into a position, it was literally just printing money. It was just following this channel, and it was just like, and people were just laughing about it. I was like, here we go again. And it was literally 4 different cycles where it did the exact same thing. And I put in some random sell at 3x. I was like, at some point, I just need to stop being greedy and I'll just get out. And literally a day later, it just spiked for people think it was probably manipulation on Binance or it was a hack or something else. I think it was Mana and one other coin did the exact same thing, the exact same day. And so I logged in and I'm like, what the hell? It was like this, just sitting in BTC. I was like, all right, well, thanks. Because I don't want to sit and live in charts. And so I use those purely to let me, live my life and keep me disciplined. And I don't get into it. I don't watch something happening and it's at 2x and I think, oh, what if it goes to 3x? What if it goes to 4x? Let me change all my sells, change all my positions. No, I set that, I never, when I put in a conditional sell or a sell, I never change it. It is what it is. And I'll never go back and change it because I think it might go more, because I'm probably going to be wrong.
I just wanted to touch on the stop loss thing, because that was the original question, right? Yeah. Can you say the question one more time?
So in terms of, stop losses and take profit levels, when you kind of plot those close to your support resistance or whatever, cup and handle, head and shoulders.
That's what it was. Yeah.
Do you think that'll help alleviate, any terms of emotional trading that people might face?
Yeah. So like each trade you go into too, like you should have like a risk profile that you like. So it's like whether it be like 1 to 3, right? So it's like you're willing to risk maybe 1% for a 3% gain. But putting the stop losses, again, I'm kind of like on the same thing as Randall, is I don't like stop losses if I don't have to. I have a mental one if I'm on the screen, right? I hate having one just out there because somebody else can see that, and I hate that because it basically puts your hand on the table for everyone to see. And I just don't, even if exchanges say nobody's betting against you or anything, like I just don't trust it. Again, like I'm kind of like a devil's advocate kind of guy. I just don't trust anybody in the market. Like I just don't believe it, right? So like somebody can always see that stop, and I've been stopped out before like that, literally like right on, like within pennies of my position, and then it just goes right back up. So like I've had enough instances where that happens where like I just don't trust it. So I have a mental stop loss. Say that again? Trailing stops. I mean, yeah, if you're profitable, I guess. So yeah. I mean, if you're profitable, yeah, you can have like a trailing, like a trailing stop, for example, if you're profitable, but just on just where your stops are going, for example, on moving averages, for example, right? Even if it's a smaller chart, I never put them directly on a moving average, ever. I always put it usually below, but enough below, right? So for example, say there's a moving average at $100, right? And you are in at 102, you're like, okay, cool, I'll put my stop at 100 because there's a moving average there. I'll risk a little bit more to maybe just make sure I don't get stopped out if I can't be by the screen. So if I have to go to sleep or something, I might put it at like 99 and 55 cents or something abnormal, right? Nothing on like a big even number where other people are looking, just because there's always somebody else out there trying to look essentially like to take your money and swipe you out. But yeah, stop losses, I truly hate them with a passion unless I have to like sleep, for example, and it's just like every time you try to like go to sleep, you're like, you know what, I'll just get like 4 hours of sleep, I won't put a stop loss. That's when you get kicked in the ass, you know what I mean? So it's like they're required unless you have somebody watching a screen at all times with a mental stop in place, because price action can change too really quickly, to where maybe your stop, essentially if you're watching the price action enough, maybe the stop, you change it slightly on your mental stop, but it's you're still there to monitor, because price action can change really quickly as well. But stop losses, yeah, I hate them. I don't personally recommend them unless you can't be there. But also it does put in a lot of, it takes emotions out too. So like they can be good for certain people. If you're more of an emotional person, yeah, it might be good just to set that there, because once it's in, you walk away, whatever happens. It's out of your control at that point. You pretend like that order is in and you can't take it back. You can take it back, but you pretend like you can't, because that removes emotions really quickly, both on the buy and sell side.
Yeah, I want to tee up Chase here because he talks a lot about when and how to what's called take profits or de-risk, because what Ty said is important about he still has a mental stop loss. So I do too. I mean, nothing pains us more. I got in the habit of I'm kind of almost a crypto cheerleader. I got in the habit of always talking about entries, and I have my own exits, but they're kind of just mental exits, because what you don't want to do is be just hold and hold and hold and hold. I mean, it just pains me to watch people just lose profit, everything that they worked for. And because it's the stories that Dan was telling. It's like those are the stories that keep you up at night, because you're like, I was here and that long slide all the way down. So it's like, just because I don't use stop losses doesn't mean I don't have exits, and I'm not willing to cut my losses. So I'll look at, if I see a double top or something, I mean, almost 9 times out of 10, it's about to drop, for me at least. Or if I see a flat top triangle, I've looked at enough charts that, yeah, I'm wrong sometimes, but for the most part, I'm like, no, I'll get back in a second. I don't like that. So you start to get that pattern recognition. But also
too on your sells. So say you're in like a long entry, for example, and you want to set your sell somewhere. Maybe there's like just a moving average above, and you want to use that as resistance, right? So you can see that clearly, like this is likely going to be resistance. I would never put my sell directly on that line either. So again, if you're in, say you're in at $100 and there's a line at 101, again, that's why I preach like the buffer. I'll put my sell at maybe 100 and, 75 or 80 or something. Like getting filled is way more important than being perfectly executed. You'll get those and they feel awesome because you feel yeah, I beat everybody. I got the perfect entry, perfect exit, but it's not going to work out like that in the long run. It's okay, just leave yourself a little buffer. Again, just consider that extra percent that you missed, or a little extra piece of a percent, is the cost of business to be in that trade. besides the fee.
I actually really like this because it's three people with three different views. So the way I trade, and it's been wildly successful, is I play that I'm wrong. I walk into every single trade that I'm dead fucking wrong. Why would I do that? Well, it teaches me how to build the backside to make sure that I know what to do when I'm wrong. Inevitably, we'll all be wrong. Do you know what to do at that point? Do you freak out? Do you panic? Do you smash your computer? Do you buy down? That's the theory that people are not getting. They go in because they're like, oh, this is perfect. Well, what if? So for me, the same way is I'm a buy down king. I do it a little differently. Obviously, I have more capital and my goals are a little different. But say I buy a coin, I always leave enough money to double buy it down. And then one more time, I call it the oh shit buy down. Meaning, say I buy a coin or a project and I'm like, I have 100%, we're gonna use a number, 100% of my money, I'm gonna put in 20, 30% tops. Because what does it do? It allows me to use the capital I've already pre-designed to go into this vessel again. And I don't miss if it goes up and I'm right on my first thesis, but if it goes down, I have enough capital to double buy my bottom. Meaning, if I bought 100,000 at 50 and 100,000 at 25, you're gonna be kind of in the middle. But if I buy 100,000 at 50 and 200,000 at 25, now I've drawn myself farther down. As they were talking about stop losses, I actually am a firm believer of using trailing stop losses. It's a little bit more advanced and it's a little bit more intense, but the reason I use trailing stop losses is because we all have that little itch. And I don't ever want to miss out on a trade. So what I mean by that? Well, say I've cured 10% on a trade. I'm stoked I've cured it. My charts are telling me this thing is going to go. But my thesis is be smart, take my money. What I'll do is I'll set a trailing stop loss that allows me to get my profit. So say right now I'm up 10%. I know that I'm not going to set my trailing stop loss at 10% because it's a damn good chance it's going to fill a little bit and then just start backing down the backside of me. What I do is I set it a little bit down. I call it 5-10% away from the mark because it allows me to take a little farther of the gain and make sure I've locked in the profit I have. I'm guaranteeing getting my 7%, my 8%, but I'm gonna make a risk for a little more. So I want people to be educated in the sense that there are ways to play these different vessels, and there are so many different ways to skin this cat. But the same thesis is all the way across the board is understanding when to get in and when to get out. I also use this logic that I truly believe de-risking is the best way to trade in any free trading market on this planet. Who here thinks, first off, who here's heard that stupid, asinine comment that if you had 100 grand in 2008, it'd be worth 200 million now? Who here's heard that? Do you understand the emotional control it would have taken to hold $100 until 200 million? I don't think I've met a single person who could. Now, I have a thesis that would help you do that. And what is that? Set and forget. Meaning, if all you have is profit, free tokens, a free ride, you can truly forget it. You're not emotionally tied to it. Maybe you take some out because you're like, damn, I wanted to get a new house for my family. But the thesis is you have to understand where that's going and what you're doing. Otherwise, you're doomed. And we want you to look into these things as an advanced trader. Even if you're not advanced. Someone asked me earlier, they said, I'm in a hedge fund. I don't need to know about trading. I'm not going to name who he is. Don't invest in his hedge fund. Just don't. You want to take a little bit of everything and then make your own story. Everyone has something different. For me, I'm not trying to make money right now. I want, without a better word, fuck everyone money. So how do I get that? Well, I keep getting my free racers in the game. I become successful because I'm a slot player and not a gambling slot. I look at it like this. If I have money to put in a vehicle, my sole goal is to get into the vehicle and get it back out in the quickest amount of time and let whatever dollar amount or free assets are in there trade. And I go on to the next one and the next one and the next one. And all of a sudden you've built a portfolio that is massive. And what did it cost you? Time. But that's inevitable. A lot of people, it costs them time and money, or a relationship, or a family member. Because you're making uneducated decisions with a whole lot of hype and you're putting way too much money at play. So if you're seeing the same story back and forth, it's because it's like jumping out of a plane. Who here has skydived? Who here's done that thing where you go 6 hours and jump out the first time by yourself? Damn, I'm the only, and two. You know, for 6 hours, all they do is teaching you the same thing. Grab here, look red, release while you're holding. 6 hours, same shit over and over. And sure enough, you jump out of the plane, you just start screaming. But the whole process is we want to classically condition muscle memory into your body. I want you to see a height move and go, nope, nope, and just keep moving. Because you've heard how we've done. A lot of people have dug into what we've done. We've made that amount of money because we have small tactical risks. Because here's what happens, and what a lot of people don't understand, and it kills far too many great men and women before their time. They start with 100K and they get up to $1 million. Congratulations, right? Success story? Well, the metrics they use to get to that million have now gone out the window. Take care, buddy. And they're doing a completely different story because they have so much more money in play. They start forgetting the logic and the fundamentals that got there, and they start living in a world that, okay, a $2,000 gain today isn't the same because I have $1 million. I want you to keep the same business logic from day one when you have very little to day infinite when you have a fortune, because those are the things that are going to define you going long term in this space. How do you do it? You get your money out. You make sure that what you're trading with is free. We amassed over 3,000 Bitcoins this year alone for free. And I did it with a lot less money than you'd ever think. So I can hold them or not hold them or trade them or not trade them. They cost me nothing. They cost me my time. And I want people to understand that because there's so many people selling so many dreams. What happens if I told you that 99.9% of their dreams aren't yours? Right? Who here wants to make money right now? Okay, who here wants to make money long term? Well, there you go. I love you long-termers. There's two different thought processes. So are you going to use the same trading or the same investing metrics to get to there? Absolutely not. So please, make sure you're building your narrative and your story, and you're working to get the results from that. And no matter what anybody else says, that's their thesis. Use yours and get your results. Any more questions? I can't see anything with this. No questions, nothing. Oh, let me get your mic. Hang on. Sorry. Awesome. I'll be Vanna White here in a second, even though you're much better looking than I am.
Hi, my name is Linda. So I'm new to this space. Just 2 months I got into crypto, and I've been trying to learn and
Congratulations.
focusing on that. And but one thing I wanted to say about that panel that you did with all 5 of you, I mean, I came here to learn, and I've been in all these sessions, and that was so different than anything I heard all these 3 days. So
Thank you.
It was very well done, very emotional, very I feel like I got so much self-development out of it as well. So I appreciate that, because that I would have paid more just for that panel right there. So I just want to say that. But the second thing is, so I'm new, so I bought some mining machines. I don't know what's going to happen, but it all sounds great and everything. So I'm getting mentored and stuff. I don't know, how it's going to go. But let's just say it does really, really well like they're expecting it to do. What do you recommend, immediately, how much do I take out right away? Someone that's never done this, and all of a sudden we hit it.
So you're going to hate my answer. But this is a beautiful question. This is actually the problem that plagues most people. First off, you said some things in there that should scare you as much as it scares me. And here they are. I don't really know a lot about it. I bought these mining machines. Potentially they can go here, but I don't really know a lot about it. That's the first fault that you've done. Seriously, it truly is. And here what's compounded on that is now we're adding a risk metric that's not quantifiable. You're saying, when do I take profits? At what point? Well, let me first start out with saying, learn more about what you're doing, because you're already 5 steps ahead in your mind, and you haven't even cleared the first level. So to be successful, you have to be educated. So and I get it, everybody wants it now. Who doesn't? I want a jet right now. I don't want to work for it and earn it. Who does it? Who doesn't want a bag of cash to fall in? That's inevitable. We want that. But I want you to understand what you're going into, and what you're doing, we're probably all guilty of at one point. I want you to know the potential gain and downside of every movement you make, because then it's going to be more tactical. Because you didn't even say, when can I expect to break even on my investment? already into the profits. And that's not a bad thing. You hear a different vibe from us because we're real people, like trying to tell you guys what we've done. We're nothing special. We literally just, each one of us took our lane and we stayed in it. And the biggest problem that I see in all these spaces, in all business, is people posture about what if. What if the future is this? What if the future is that? It's a variable you can't control. All you can do is line as many ducks in a row to give you the best chance at success, or at least knowing your failure. As of right now, loss you think would be your investment. But what happens if I told you can lose more because you could mine unprofitably? What happens if next week a new mining rig comes out that now makes your mining rigs obsolete? So before you can even think about profit, you have to think about stability, consistency. Where is this going? What am I doing? Those are the answers you answer first, far before you get to the profits. Now, when it comes to profits, here is what I would tell you. Say everything goes great and you make your money. What I would start doing is I would start taking large chunks out of it and returning it to fiat to make sure that your investment is free. People go, well, I don't get all the big money then. I would much rather miss out on huge money than take it in the teeth. Who would agree with that? Who took it in the teeth and hated it? There you go. So build your logic and your story so that you have the best chance at that before you even think of it. Because I promise you, let me tell you one thing. When you start making a shit ton of profits, it's really crazy how savvy people become, because what happens? You need to figure it out. It's now in your best interest to do what you do with that. But again, what I would do is I would return it back to fiat, a stable asset, stable vehicle, and I would be taking profits off once I'm good and pointing them where you want to. Is it Bitcoin? Is it some altcoin? Is it whatever? But that's what I would do. And I give this same advice not just traders, but ICO holders. And I ruffle a lot of feathers with the statement I'm about to make, and I'm going to do it again, because I just don't give a shit about giving people real stuff. The big thing I see the problem with ICOs is they raise your money in a currency and they never take it back to fiat. Who here thinks that's the dumbest shit you ever heard? A couple hands up. Like, I do. I 100% think it is. How many people funded $100 million and now have 20? Isn't the first thing where you invest your money in is to be essentially a fiduciary and care about your investors' money? This is the first thing you didn't do. I mean, if you're a CEO head, aren't you educated, right? You just took someone's money. So the first thing you do is an uneducated move? Where do you think we store our money? Fiat's the best trade I've ever made. Fiat is a phenomenal position. Do you want to know how much money right now I have in crypto? $0. I have some short positions on Bitcoin and Ethereum, but besides that, I'm sitting fiat. Those 3,000 coins we took out at $7,100, our position right now is a phenomenal one. US dollar. I want people to understand that this is still so wishy-washy in a sense of how it's being moved, because we don't have the high-frequency algorithms that we most certainly need. And we have a lot of misguided information that is sending people on the thesis of, what do I do with all this money? Hence why it was Moon and Lambos. Everybody was thinking about what they were buying and why didn't they get any of it? Because the emotions of what if was much better feeling than actually receiving said goals. So again, back to it. I really want you to focus, and I would help you if I knew shit about mining, but I don't, is start running your numbers and find out when you're even. Find out the worst scenario possibly that can happen so you know your exposure to a max. And then find out what your top possibilities of potential gains are and risk that metric on a scale. Like Ty was saying, if you're risking 80% of your free-flowing capital for a 2% gain on that money, that's a bad movement. For me, mining is something I could never really follow. I did one transaction one time, had 2,000 miners, and I sold the income to a publicly traded company, Paper Trading. I don't know if a lot of people know that. They're buying my cash. They were publicly traded companies in Canada, these marijuana companies who couldn't bank marijuana money. So they were buying paper from other companies so that their books would have more value. So please, one step at a time. You're trying to run this marathon, and you don't even know if you have 2 left feet or not.
Well, the thing is that I have reports, so I know what my machines are producing, and I've calculated, so at 1 cent, it's a lot of money. So I don't know, because I've never been in this industry. I don't know how to handle that. I don't know how fast to react, how fast to sell, so that's why I'm.
And I know very little about mining, and I can tell you right now, it's almost impossible to figure out what your exact upside is, because every second, dynamically, your value changes. Right. The price of Bitcoin delineates how much money you're making, period, period, how much you pay for power. You know, I hear a lot of people tell me they want to build huge mining farms, and they have no idea about power in municipalities. Like, you can't just go put 5,000 machines up. You need a power grid. You need to buy kilowatt hours of, like, anybody know who Ken Washington is? He's one of the greatest guys in this space. He buys megawatts, huge facilities, and he has massive municipalities getting involved with it. So that variable is constantly changing. It's another thesis of why I tell people, if you don't know anything about ICOs, stay away. For one reason, and I know I'm ruffling feathers, I'm sure there's ICO owners in here that are like, fuck this guy. That's fine. But you don't know your possible upside or downside. How can I prove that? It's an unregulated market. Are you a guaranteed security, or are you a guaranteed utility? Have you done everything that's right? But you're telling people to come aboard your ship, but you have no idea the destination. You have a theory of where you want to go, but you have no way to quantify that that's a guarantee. And absolutely no consequences. You're not buying any value from something. You get fairy dust. So be smart. Take one step at a time. There's no shame in figuring out when you get back to break even. There really isn't. The profits will come, and you will understand that. Like, too many people focus on profits, and they forget that it's the product that you're building that kicks the profits out. You never need to think about how much money you're going to make. And I know that's like, what? Build good shit. Invest in good shit. And the byproduct of value, consistency, and good shit is currency. Unless you rob banks or you're some nefarious criminal, there's no possible way you just get money. So build your logic motion so that you have made a playing field so you have even a chance to do that. Right now, I don't know shit about mining, but having this conversation, I can tell you 10, 20 variables you're not thinking of right now that could just destroy you. And those are things. I told you there's $120+ million short position right now on Bitcoin at about $6,500. What happens if that hits and draws you down to $4,000? Now every metric you had, it's gone. And if you're not prepared for that, you freak out, you panic, you do irrational shit. And that's how you go from in a rough situation to broke. I'll give you a way to realize that. Anybody here have a significant other who they thought was out doing something wrong, and they lost their shit only to find out they're just hanging out with their friends? That's what I'm... But the assumption of what if destroys people emotionally. Like, my own wife, she will be, I don't understand. And then I'm like, I was in the other room. People's idea of this, what if, can control the shit out of you. And I'm telling you, every one of those statements is an emotional play. Emotions should be shot out of people's heads in free trading markets, because it will 100% leave you to failure. No question. Any more questions?
Thank you.
Can we go to the back?
Yeah.
I got it.
Do you think Bitcoin's going to hit 5,000?
So they can hear you?
Do you think Bitcoin,
I love these questions too. So I do live on the beach, but keep going.
do you think Bitcoin is going to hit 5,000? And if it does, when do you think it's going to hit it?
Fuck. So I wish I had that answer. We would all be rich, and I would give you all money with me. I have no idea. I trade in a free trading market, and I use nothing but charts. I can tell you where some key points are that I'm looking at. People ask me when I'm going to buy back into Bitcoin. I would say in the high 7,000s is going to be my position. I'll probably ride it out until about 8,400, de-risk about there, come back in around 9,000. 12,500 is another position I have that I'm sitting and waiting for. But I have no idea where it's going to go. And anybody who says they do, blast them in the face. Because no one knows that. If they did, they would be a messiah to the world that everyone would want to meet. Do I think Bitcoin has the potential to go to zero? Uh-huh. I also have it has the potential to go to infinite. What happens if I told you there's a world that a lot of you might not know? Who knows anything about the derivatives market? Okay, so a little educational piece. So who here thinks they know what the largest financial market in the world is? It's what? Wrong. Anyone else? Derivatives. $1.8 quadrillion roughly sit in derivatives market right now. Do you know what that means? That can sink world economies. I truly believe that these are a new vehicle for derivative-based contracts. I truly believe it. History tells me that story, okay? Louis Ranieri's mortgage swaps, what happened with that? We watched a fucking movie about it. They made a movie, it was so pathetic. People always take an idea and the greed of the wealthy always augments it into something that benefits them far before it solves any great problem. And I want people to realize that. That's a huge, huge, huge thing. You have to understand that this is getting morphed. Well, if my thesis is correct, what do I think Bitcoin is going to? Hundreds of millions of dollars a coin? That's absolutely my thesis. Do I believe it will be Bitcoin? I don't know. Currently, right now, that's what I trade. But I believe in my thesis that there is going to be a cost, a barrier to entry to trade new age swaps. And that barrier to entry right now, currently as it stands, I believe is Bitcoin. And why they're like 500 million? Because it doesn't matter. They'll make a price that will alienate the majority of the world because they'll be terrified of that number. And what they'll do, they'll build an orange derivative, a petroleum derivative, every commodity on the planet, and they'll trade it. But they won't trade it like how a derivative's traded now with a 200 to 1 upside or downside. You and I will trade it. And you and I will trade it. And you too will trade it. And that's a beautiful thing. So if you're going to learn anything about markets, I think honestly, the best thing you can do is learn history and human interaction. If you take anything from this event, I've become very successful in my trading for basically one reason, is I'm a nerd to past issues. I love watching human beings be stupid over and over on the same thing. They forget about it and do it again. It's comical to me because remember what I said, it's my why. Why? You have history books, and now the worldwide internet showing exactly how human interactions were stupid once again, and we still do it.
I was going to say, just on touching on that, on the greed and fear thing too, why greed is super powerful, obviously, in the markets, but it's funny because fear, people seem to forget, like, really quickly. So even like look at like the housing issue, the housing crisis we had, right? Like they're now selling almost the same shit. It's almost like we forgot what happened before.
New swaps just came out. Have you seen these new? This shit's disgusting. It's even more. What just happened? Who just offered $10 billion in subprime shit loans? Bank of America or something? Now they're going to give like no money down. Why? Again, my thesis is we need more vehicles for money. People need more money. If you watch a population chart over the last 40 years, it kind of goes like this. And then all of a sudden, the last 5, 6 years, what happened? That's the problem. There are so many mouths to feed. Fuck the rich people, the mouths. And we don't know what we're doing. You think I'm wrong? Go find me a PB on a stock market that's anything like it was 10 years ago. You've got PBs that used to be 80 cents in the dollar that are now 8/100ths of 1 cent in the dollar, and it's a $50 billion company, $500 billion company. People are inflating these things. Or you think that the stock market's anything different than crypto? I'll bet you $1 million right now, recorded, that we take out 3 of the top high-frequency algorithms, stock market's real quick. $100,000 gallon of gas. Think I'm wrong? Go watch the trades. Citadel Group trades what? The same amount of trades that all the NASDAQ trades all month in the first 4 minutes of one day. Get educated with going out there. Otherwise, you're going to get run over. And you need to think about small wins. You hear a lot of people talking about big wins, and it's awesome.
I want to talk about that before I forget.
Well, we got to cut because it's 5. I see we're running deep. We good? Okay. But people focus on these massive wins. I'm going to close with one last thing. We turned a very small amount of money into what a lot of people would consider a massive amount of money. Okay? I did it by small calculated wins. Compounding is the greatest tool no one fucks with. It could solve world hunger. If we made it illegal to have a child unless you put $500 in a Vanguard or some interest-bearing account, we would stop poverty. We would stop it. $500 by the time you're 60 is millions and millions and millions of dollars. But no one cares about that. Parents want to have a new car and a nice house, and they want the great American dream. The problem is it's not won by home runs. That's why we glorify a baseball player who hits 50 in a year, and we forget about the guy who got on base every single time to make it so that team won the game. So if I can close with anything, because we can go on forever, especially him and I, and you can come down to the booth and we'll go on.
I just wanted to say really quick too, even just like bunts and signals, what Chase was saying, if you're trading too, the biggest thing in my opinion that you can do for yourself that's going to benefit yourself for like long-term success is just taking those wins, even if it's 2% at a time, if you're just trading like regular crypto. And the reason why I say that is because those small wins add massive amounts of confidence and conviction to your strategies. So where if you like are, say you're just on like a dry spell and you've taken like 3 losses in a row or 4 losses in a row, even if they're small, it doesn't matter. It could be 0.5% each. Internally and emotionally, you'll still now even more second guess your conviction on every trade that you make, to where you're like, oh, but it's good, but I'm scared because I've lost the last 4, blah, blah, blah. You need those consistent wins. You don't need to be hitting those home runs. Those small wins add probably, if not one of the more important mental pieces to the picture, and that is like having the conviction and confidence in each trade that you're making. And I say that because I've been there. Like where you take back-to-back losses, and it's like I know I'm good, but like I second guess myself on the next one. I'm like, oh, but I was wrong on that. And you second guess yourself. Whereas if you get back to back to back to back to back, and you keep it consistent, you're like, not in a cocky way, you're not like a genius, but like the conviction is there, your confidence is there, because the small wins at the end of the day do add up as well. You don't need to hit the home runs.
Yep, and do less positions. I know guys who tell me they day trade, they have 3,000 positions a year. I'm like, damn, you gotta be right that many times? I've probably made 10, 12 trades this year. Conviction, focus. If you guys have any more questions or anything like that, please stop down the booth. We'll be there for a little longer. Thank you so much for staying, especially when it's late. Appreciate it.